Hi, I'm Steve Sosnick. I'm the Chief Strategist at Interactive Brokers.
My name is John Hagedorn. I work in the self-storage industry.
I've been with the firm for over 25 years. I've been in the markets for several more before that.
I got involved in investing because I wanted to make my money work for me and provide a better life for my family.
I try to get as many points of view as I can. I subscribe to the Wall Street Journal. That's not just for your plug. That's because it's been a necessary part of my day for quite a while.
I really don't pay that much attention to the stock market, if I'm being perfectly honest with you. I'm more of a set it and forget it type of investor. Most of my positions are long, and when I am interested in the more minutia and the day-to-day goings on in the stock market, I typically will turn to WallStreetBets because it's where the flavor of the day type of stuff is going on. And so I saw a post from DFV early in January where he basically showed that GameStop was massively shorted, and at that point the stock had started rising pretty steadily. And that was really what led a lot of people and myself to take a closer look and to jump in. The best way to describe WallStreetBets, it is a degenerate hive for gambling on the stock market. And that's not an insult. Many people that frequent WallStreetBets will willingly tell you that and wear it as a badge of honor.
I describe the Reddit forum WallStreetBets as the latest in hundreds of years of human beings trying to get together and discuss their investments. They did it in coffee shops in Amsterdam and London. They did it under a buttonwood tree in colonial New York, and they're doing it now on WallStreetBets. No, I think what's discussed on WallStreetBets should be more chatter among friends rather than actual advice. I think that in any time you're getting investment advice, you should figure out what is motivating the person who is giving that advice.
It's tough to know because WallStreetBets is just pure, unadulterated gambling chaos. You don't know what somebody's angle is on there. You don't know if somebody's trying to pump a stock or dump a stock. You don't know what their goal is. But with that being said, sometimes some interesting financial advice gets posted there. And if you are interested, do your own research, go take a look. This is publicly available information. And if you like what you see, take a position.
There's never really been quite so much focus on let's stick it to the man or let's bring these guys down. I think what we saw in WallStreetBets over the past few weeks is really not all that different than a guy in a Viking hat running through the halls of the Capitol. It's in many ways a similar type of stick it to the man type of sentiment.
There's no wizard behind the curtain directing everybody what to do. It is pure, unadulterated, raw mob mentality. Okay, you go in there and you can see at any given moment on WallStreetBets, there's a million different people talking about a million different things.
I don't know that this is outright manipulative. And you do have to wonder how many people were using WallStreetBets to entice others to help out their investments rather than trying to help others make money through their investments.
There's nothing market manipulating about a totally anonymous, democratic internet forum where people can go and post what they think is good and what they think is bad and what you should and shouldn't do.
I'm not allowed to comment for that on the record, but let me explain something that goes on that is not well understood. That is a feature of markets, not a bug. It was perceived as the clearinghouses or the brokerage firms turning over the monopoly board just as the little guy was winning in favor of the big guy. I think it's a lot more complicated than that.
I would need to know more about exactly what happened at Robinhood. Why did the CEO of Robinhood go all over the place, all over media, and do a ton of TV interviews and claim that this wasn't a issue of lack of funds on their part, and that they were doing it to protect retail buyers and doing it to protect their customers?
There was no liquidity problem. And to be clear, this was done preemptively. So we're really in unprecedented times. And in order to protect the firm and protect our customers, we had to limit buying in these stocks.
The best thing we could do is all be educated better. Everybody. I could be educated better. I learned about the little weirdness in short selling just last week. Everybody, the more education that's out there, the better. Never stop learning.
First and foremost, there needs to be just a hard look at exactly what mechanisms and tools hedge funds use when they're shorting companies. Things like that have to be cleared up. Retail investors and investors in general have to feel that it's a level playing field. And right now, it certainly doesn't feel that way.